We operate two stock exchanges, one being the Toronto Stock Exchange and the other being TSX Venture Exchange. The Venture Exchange is geared towards smaller, early stage development companies. We have lower listing requirements than the Toronto Stock Exchange, and the whole intention is to allow companies to access the public markets at a much earlier stage. One other benefit of the Venture Exchange is we mentor our issuers in that we help them become good quality public companies, if you will. We provide certain expertise in terms of corporate governance and so on that allows them to grow into bigger, stronger public companies.
A lot of PhDs may be very strong in the science, but they don't necessarily know how to communicate that science in a context that business people need to hear from if you're going to be looking for that capital. And oftentimes what we do see is that the ability of those companies to get the capital is severely impaired by those scientists' inability to put the message in a form that they need to be communicating it to the investors in a timely basis. I think most people think, most scientists that we see when they approach us for money seem to think that we should be giving them an hour, 2 hours to go through all of the science of the company. And nobody has the time for that. A business manager will come in and they will basically take over the running of the company and let the scientists focus on the science and the research component of it. But at the end of the day, that business person will do a far better job of crafting the story in a manner that the investor and the analysts want to hear it, and oftentimes will, as a result of that, give the company a far greater chance of success in gaining access to that capital.
I think entrepreneurs first need to understand that when they first go to the public markets, they're not going to raise a massive amount of money that will carry them through their entire business plan. The intention is to have that funding last for, say, 12 to 24 months and be able to go back and access the markets periodically. Typically what we see in good scenarios is a company will set out certain milestones throughout its business plan. Once it achieves those milestones, it will obviously update the market and potentially go back to the market for additional funding at what is expected to be a higher valuation.
As I oftentimes say, make sure that you've got a management team that's more than just a group of scientists. And the point I always try to make is that the minute you go out for that first round of financing, you've ceased to be a scientific research project and you become a business, and you need to have both the management and the board of directors in place that are going to help you in your growth as a company, in particular your ability to tap into the capital markets. And once you've got those in place, then I think the company's in a better position to look at the various other components of the going public process, such as the auditing, the legal structuring, the patents. It's almost the foundation, if you will, for any company, but in particular it's crucial for a publicly traded company to have that strong management and directors that can give the guidance in all of the other aspects, both of the going public process and in hopefully sustaining the listing once they've got it.
I think one of the common mistakes that we see entrepreneurs make is not appropriately budgeting for their business plan. And typically entrepreneurs are very keen on their business and they may think that they can do a lot more with a lot less. What we like to see is a conservative approach to the budget. We like to see that they have talked to other people in the industry and consulted with perhaps experts that can advise them on what it really costs to build the business in the direction that they plan.
Investor relations is critical to any successful listing, and I would argue, quite frankly, that many private companies could take advantage of investor relations as they look at the overall process of obtaining capital from whatever source it may be. Investor relations is not public relations. It's not the selling of your story. It's the crafting of your financial story so that those investors that you want to attract, whether they're the shareholders or the bankers or the analysts, understand the value proposition behind the science. And oftentimes, investor relations is critical and extremely useful in taking the science out of the science, quite frankly, and rephrasing it in a business context so that the broad investor and the shareholders can understand what it is you're actually trying to achieve. It's critical because in today's marketplace with many life science companies, particularly in the R&D space with a 10-year time frame to commercialization, if they're lucky, you need to make sure that you've got consistency over the long term in your messaging and people understand what it is they're getting themselves into in terms of the investment. And investor relations is all about that, basically.
Well, I think what's hot right now, and particularly for the clean tech space, is renewable energy. And I think that's very common across both exchanges, both Toronto Stock Exchange and TSX Venture. And it's not surprising really because Canada and both of our exchanges have a strong history in the resource sector. And really when you think of renewable energy, it's essentially mining in a different form. All we're trying to do is build a source of energy, and that may come from wind or hydroelectric as opposed to, say, coal or oil.